Hello, this is Chris from tradesight, and I wanted to walk you through a little technique that we use here at tradesight in our 6-month training program that we teach people how to implement as part of their trading system. And of course, we're using the eSignal 11 platform, and this tool is designed to be used on the eSignal platform. Basically, when you're trading, it's important, obviously, to be able to spot good entry points in the market, but it's equally important to be able to get the best possible exit out of your trade. So we have a variety of tools that we use and employ that allow people to get better exits. And that's really part of what we work on over and over and over again in our 6-month training program. So let's take a look today at a stock. This is YRCW. That's the symbol. This is the daily chart right here. And you can see you've got a nice multi-month, about 4-month base formation here that the stock's been forming. And volume, if you look at the bottom of the screen there, been up the last 3 days as the stock's approaching the highs. We like to see that. That's $27 even is the breakout point from the high back at the end of February. We're approaching that right now coming into today, which is Monday, the 23rd of June, 2014. So let's switch to a 5-minute chart. Let's take a look at the actual price action for the day. So again, remember, we want to buy this stock breaking out above $27. And then the question is, how do we manage the trade? And what I've got on the screen here are a couple of lines that are each day you get a red and a green line. So what you can see right now is the price action from Thursday, which is to the far left, and then Friday, which is the middle part of the screen, and then the beginning of the day using the cool bar replay mode in eSignal 11. The day has just begun here on Monday, the 23rd of June. And we're 2 bars in, so we're 10 minutes in at this point in time. But these lines, we call them pressure thresholds. What they do is they give us sort of a point of either acceleration or a support and resistance point, areas that are very, very important. If the stock can get through that price, it's usually going to run further, as you can see it did on Friday when it got through the red line. It accelerated. But at the same time, getting through that price isn't always that easy. And it's a very specific calculation that a lot of professionals and institutions use. And let's see how it played out today. So here's a look at the 5-minute chart. And I'm going to move forward bar by bar and show you there's the breakout through 27. So here's us getting into the stock just above the $27 level. Now, on a $20 stock, typically I'm going to try to take a piece off for about 25-30 cents and lock in a partial gain in my trade. And then how am I going to manage the rest of the trade? And for me, that red line as we head up at 27.59, that's going to be the really important point. If I can get up there, I'd like to sell at least another piece of the trade, and then I can keep the last piece, because that gives me an opportunity. If it breaks to that line, great, it should run a little further, but it may have a hard time getting through that area. And of course, you're going to say, well, if it gets to that price, well, that's really the key, is how important these levels are. So I've moved us forward here another 5-minute bar, and at that point in time, we were able to take a partial on the trade. It actually happened pretty quickly. And then a real quick retest here of the 27 level, and you can see how it's holding that. So that resistance point that was broken on the daily now becomes a support point on the intraday chart. So we hold the $27 level, we turn up. If you didn't get a partial the first time and take a piece off, now's your opportunity. But let's watch the next couple of bars. This is what's really fascinating. Continue to head up. Look at how we reach up there, and again, I know that I'm going to sell a piece up near that 27.59, just under it, in case it can't get through. And so that took me out of a piece of the trade right up there at that price level. And now I'm down to just a quarter size on the trade, which is great. If we can break the red line here now, we can run further, and I still got a nice profitable trade. Sometimes, obviously, there's more room depending on where the calculation takes us as to where that level is. But in this particular case, 60 cents on a $27 stock, I'm plenty happy with. And it's a very liquid stock. You could get a lot of shares if you wanted it. So now let's take a look at what happens for the rest of the day. You'll hear a couple of alerts going off as I move this forward. What's fascinating is, to the penny, that ends up being the high of the session. Never came back up. That's absolutely critical information to have, and that's why we provide that. And we teach people how to use it in our course, because if you know that, you can get a piece off there. That's sort of the ultimate exit. In this particular case, there was no better price all day that you could have gotten. And if you hadn't known where that level was, you wouldn't have known to take a piece off. This is Chris from tradesight. I'd like to thank you for watching. Please like this video if you did find it useful. Hope to see you in our trading lab where we can help you make money using some of these great eSignal tools.